Hello, everyone. I'm Matt Clark, research analyst with Money Markets, here with your first week edition of the Bull and the Bear podcast. Now, I do want to make sure that after you are finished watching this video or listening to the podcast, you check out our website, moneymarkets.com. Now, every day we try to provide you safe, sound, smart, simple, and profitable information for your portfolio. Chief investment strategist Adam O'Dell, Green Zone Fortune's co-editor Charles Sizemore, myself, the rest of our team work very, very hard each and every day to make sure we're providing you with that best information that can bolster your portfolio and your gains. Now, when you do check out the website, make sure you sign up for our free daily e-letter. In it, you will get all of our information curated every single day, Saturday to Sunday, or Sunday to Saturday, rather, sorry. And you'll get all that delivered for free to your inbox. So check all that out at moneyandmarkets.com. Now, on with today's podcast, I was thinking about this the other day. And we all have habits, right? Some are good, some are bad, but none of them are easy to break, regardless of what they are. Especially the bad ones are always the hardest ones to break, but even the good ones are really hard to kind of get out of if you have to. Now, the COVID-19 pandemic introduced us to a habit that might not necessarily be new, but one that's definitely growing. And what I'm talking about here is online shopping. Before, if it was an item I couldn't find at a brick and mortar store nearby, then I'd look for it online. I was never really one that would always go to the internet first. That was just not my way. That was not how I figured. But now looking online is actually the first step in my shopping process, not my last. And a lot, I have my wife to thank for that a lot, because she's an avid online shopper and things like that. And I really wasn't that way until the pandemic. Lockdowns meant you couldn't go shopping for just about anything, with the exception of essentials like groceries. And even then, grocery shopping was made easier because of online shopping. Now, online retailers saw a big boom thanks to the COVID-19 lockdowns, because it forced us to use those platforms to shop for everything, including groceries, home office supplies for those of us that had to work from home, and everything in between. In fact, I saw an article, Digital Commerce 360, which is an e-commerce kind of a data analyzer. They reported that sales jumped 32.4% to $791.7 billion in online retail sales in the U.S. in 2020. That was up from $598 billion the year before. So it's a pretty big jump in just 1 year. And I think that, the coronavirus probably has a lot to play with it. But I think that upward trend in looking at it, I think it's going to continue. I don't think it's going to slow down any. I think it's actually going to get bigger. And here's why. Now, humans by nature, we're all creatures of habit. Whether we like to every now and again venture out and do our own different thing, when it all comes right back down to the core essentials, we are very much creatures of habit. And as I said earlier, those habits are very easy to get, very hard to break. And a $2 billion jump in e-commerce sales in the midst of the coronavirus pandemic is testimony to the online shopping habit that we all picked up. We were all kind of forced to do it. Very rarely, unless you just stop shopping altogether, which, let's be honest, shopping is a habit, and it's one none of us are probably willing to break very easily. In 2020, global retail e-commerce sales were $4.2 trillion. That was a 20% increase from the year before, and a 180% jump from just 5 years prior to that. Shopping data analysts at eMarketer are projecting global retail sales on e-commerce platforms to jump to $6.5 trillion by 2023. That's a almost 55% boost from just 2020. That's in 3 years, a 54% jump in the amount of money we spend on e-commerce platforms. E-commerce sales are going to keep eating into in-store sales as well. In 2015, e-commerce sales were only about 7.4% of all retail sales globally. That reached more than 16% last year. A lot of that thanks to coronavirus lockdowns changing our shopping habits. But now in 2023, e-commerce retail sales could be 22% of all retail sales worldwide. That's a huge jump from just 7.4% back in 2015. And as you can see, online shopping isn't a new fad. It's been around for a while. However, buying online has become more natural after COVID-19 forced many of us into the habit. It's a habit that I don't see us breaking anytime soon. So today, I'm going to recommend a stock that allows you to capitalize on continued growth in e-commerce without trying to find individual stocks, because there's a lot of them out there in a lot of different sectors, whether it be department stores, whether it be software providers, whether it be discretionary stocks, it doesn't matter. There's a ton of stocks to be classified as e-commerce. So I want to try to make this simple. I don't want to make this difficult to where you're spending hours and hours in front of charts if you really think this trend is going to continue. What I found was the Global X e-commerce ETF. It trades on the Nasdaq. The ticker symbol is EBIZ, so EBIZ, very simple to remember. It's an exchange-traded fund that invests in about 42 companies ranging from department and discount retailers to e-commerce software platforms. Among some of its largest holdings are Wayfair Incorporated, Etsy, eBay, Alibaba, Williams-Sonoma, Amazon. These are all companies that are held within this ETF. Now, over the last 12 months, EBIZ, the stock price for EBIZ has grown about 140% compared to the S&P's gain of just 60%. So that's more than double the growth in the same time frame for EBIZ. The stock hit a low about $14.10 during the March 2020 coronavirus crash, but started to rebound in April. And at a current price of around $35 a share, the stock has gained more than 77% since hitting that low point. The ETF has also outperformed the broader Dow Jones U.S. Retail Index. Now, if you're watching on video, you can see the EBIZ, which is the yellow line on this chart, has grown, again, about 140% in the last 12 months. The Dow Jones Retail Index, which is the green line, has only managed a 60% gain in the same time frame. So very similar to what we're seeing between the Dow Jones and the S&P in the retail sector, but EBIZ is outperforming both of them by a pretty significant margin. And then in addition, EBIZ does come with a dividend payout, as ETFs do. The annual dividend yield for EBIZ is about 0.75%, which comes out to about 27 cents a share, which is, again, not great, but a little more is better than nothing. You can always reinvest those dividends, or you can take them out as cash, however you choose to handle that. The bottom line is that online shopping is only going to get bigger in the coming years. Some smart investors like yourself, you spot these trends and you invest wisely to capitalize. And I think EBIZ is one of the best ways to do just that. Now, before I close out here, I want to make sure you're checking out our YouTube channel. If you're listening to this as an audio podcast, just go over to youtube.com. Make sure you search for Money in Markets. You'll see our green bull and bear logo. Click on that. Make sure you subscribe to the channel, and you can click the little bell that goes next to it and get notified each and every time we put out a new video. We are updating and putting out new video content almost every day now. Green Zone of Fortune's co-editor Charles Sizemore has a video series he's putting out, and of course, Chief Investment Strategist Adam O'Dell has got his Ask Adam Everything that is going out and has become very popular in its short time. So you want to make sure you check out that. In addition to the Bull and the Bear, the Marijuana Market Update, and our Week Ahead podcast. Plus, we've got a lot more that we're working on, waiting in the wings to come out to give more on our YouTube channel. Now, if you're watching this on YouTube, you want to listen to this on as a podcast, you can do so on any of your favorite podcast syndicators: Apple Podcasts, Google Podcasts, Amazon, Spotify, iHeartRadio. If you have an Alexa smart home device, you can listen to it that way. If you got a Google Home, you can listen to it that way. You've got a lot of different ways you can listen to us as an audio podcast. If you're just around the house cooking, cleaning, just kind of relaxing, or maybe you're exercising or you're at work, whatever, you can do that as well. So make sure you subscribe to your favorite podcast syndicator, to the Bull and the Bear on your favorite podcast syndicator. Make sure you get notified each and every time a new podcast is released. Also, leave us a review and a comment on any of these platforms. Love looking at your feedback and seeing what you have to say about anything that we're talking about. If you have a question, maybe a particular stock you'd like or sector you'd like us to take a look at, or you have a comment about something that we've recommended or something we've told you to avoid, feel free to email us at thebullandthebear@moneymarkets.com. We'll flash that email address down below, and we'd love to see that and respond to you as well. Head over to moneymarkets.com, sign up for our free daily e-letter. We give you safe, sound, smart, simple, profitable investment information for your portfolio. Coming up on Friday, Money in Markets Chief Investment Strategist Adam O'Dell, Green Zone Fortune's co-editor Charles Sizemore, and I will sit down and round table some stocks, tell you what we think. Don't forget that we also have our Marijuana Market Update that's coming out this week, the week ahead as well. Don't forget about any of those things, and check out our YouTube channel on all of our YouTube videos that we have out. Until then, this is Money in Markets research analyst and host of the Bull and the Bear, Matt Clark, wishing you all safe trading.